Stocks see a further dip ahead of F&O expiry today, with mid-caps bearing the brunt of the selling. Consumer durables, realty and healthcare are the big drags.
And LG Electronics India lists at a thumping 50% premium to its offer price of rupees 1,140 rupees, making it the latest member of the 1 lakh crore rupees market cap club. Attractive valuations, dominant market positions and a healthy growth runway see analysts give it a thumbs up.
HCL Technologies pips revenue and margin estimates and posts a robust over 40% quarter-on-quarter growth in orders. It also guides for continued strong order inflow and services growth. The IT major also becomes the first to report AI revenues.
Tata Motors passenger vehicles business, including JLR, kicks off trading in its demerged avatar today, commanding a market capitalization of rupees 1.5 lakh crores. The pure play commercial vehicle arm will list on a later date.
Hello and welcome to a half-time report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we are definitely seeing some amount of pressure in the market. So we have the Nifty, which is just about lower by around 73 odd points at this point in time. And we have the mid-cap index, which is down around 0.6% as well. But we do have the WPI September data which has come through. So it's coming at around 0.13% versus 0.5% on a month-on-month basis. So that's basically the preliminary number that has come through at this point in time. We will wait by for the internal details, but in the meantime, we do have Sakshi Gupta, who's the Vice President and Senior Economist at HDFC Bank, who's joined in to discuss this. Sakshi, hi, welcome to the show. If you could just take us through, the decline that we've seen. It's a little bit of softness that we've seen in terms of the WPI. How does it stack up versus what your estimates were for the month of September?
Hi, good afternoon. Thank you for having me on the show. So you're absolutely right. This number on WPI at 0.13 is actually lower than what we were estimating for the month. Our forecast was close to 0.7%. So clearly, it's a downward surprise. Look, over the last couple of months, we have seen that WPI inflation has been moderating, and the moderation has been very, very broad-based. Right. So you've seen, metals, basic metals, crude oil prices, natural gas prices, all these items cool off. Moreover, even food inflation, which is, part of the primary articles within WPI, month on month, they've been coming down. That is reflected even in the CPI data. So broadly, from a wholesale perspective, I think this inflation number, again, is a downward surprise, and we expect that over the coming months, given the global commodity prices trajectory, plus, how, food inflation domestically has been progressing, I think both these, suggest that wholesale inflation will remain in, sub 1%, also for the remaining part of this year.
Okay, sub 1% for the remaining part of the year is what we could watch out for. But Sakshi, also right now, like you're mentioning, food inflation, actually this time we're seeing a deflation, 1.99 downtick. That's a negative number there versus 0.21% on a month-on-month basis.
Yeah.
What should we watch out for here? Do you think that this deflation will continue here on the food side as well?
Well, I would expect, this, there are base effects, etc., that tend to influence the, monthly numbers. So in certain months, you could get, deflation for food inflation. But, broadly, my sense on food inflation is if you even look at mandi prices, you look at how, food production in general has been in this, summer cropping season and the last two seasons. There is sufficient supply in the market, which is causing food prices to remain very, very low. And the momentum on the food side is both reflected in the WPI as well as the CPI numbers that are coming out. Moreover, even on the global side, if you look at, food prices globally, you look at commodity prices locally, or you look at globally, or you look at metal prices. I mean, there is a general, moderation, and certain sections, a deflationary trend that is being, observed.
Okay. How did gold prices tie into this number according to you, Sakshi, and what might be the impact going forward?
Well, look, for gold prices, yes. I mean, in the month of September, we did see gold prices actually inch up. This has been a story on the gold front for a number of months now, right? So it is, to a certain extent playing a role. But I think gold prices tend to have a bigger influence on the CPI series that we track, and on the wholesale front, basic metals, etc., have the largest weight when we are looking at manufacturing wholesale inflation. So I think that bit has been very, very soft and has outweighed any sort of upside pressure that you might see from gold. I think gold is a story more dominant when we are looking at the retail inflation basket, where consistently we have seen that core inflation has been sticky, has been actually moving up. And we saw the recent numbers that came out for September, that gold prices were pushing up core inflation over the last couple of months.
Sakshi, just now with the CPI number that's coming yesterday as well as today's WPI number, now what could we start seeing coming in from the the Central Bank of India, the RBI side? What should we see from that front?
Look, undoubtedly in the last policy, the central bank has, talked about the fact that, inflation trends do suggest that now there is policy space that is opening up for further rate cuts. I think that we closely watch out for the October inflation print, which I think can be sub 1%, and depending on the GST impact, it could be a very, very low number that could come in. So that would further kind of strengthen the argument for the Reserve Bank to look at perhaps a little bit more of policy easing, through the repo rate, through the policy rate. And I think that the December policy is a live policy now. Clearly, moderating inflation does provide space for the central bank to act and provide some amount of, further support for, domestic growth.
So I'm just going to quickly ask you about your rate cut estimate for, say, the next two meetings or what you're envisaging in the next 3 to 4 months. But just before that, wanted your thoughts on the GST rate pass on. You said that the CPI number could be much lower than expectations because of the GST cut pass on. But is that going to be sustainable, according to you, Sakshi?
Look, so, of course, this will be a one-time impact, right? That will, where there is a change in price and then it will be in the system for the next 12 months, right? So depending on the pass-through of GST rate cuts, your overall inflation trajectory for the coming 12 months, till October 2026 could actually come down. Right. So you're right that this is a one-time thing, that will pull down the inflation numbers. But from a monetary policy perspective, look, ultimately, it implies that your average inflation for Q3, Q4, and then Q1 next year is, of course, going to be, much lower. So, for instance, I'm expecting inflation to average at 1.8, 1.7, 1.8% for Q3. With a downside risk to my forecast. And Q4, I'm estimating below 4%, so 3.9%. While this is temporary, but it's still going to be there for the next 1 year at least.
Okay, and quickly, if you could just pencil in what you are estimating from the RBI in the December policy, and maybe in the meeting after that as well.
Right. So I think that my forecast for the policy rate in both the December and February policy is really contingent on some of the growth data that comes out, high frequency indicators for October, November. I think if we continue to see some amount of disappointment, in terms of domestic recovery and the push to consumption from GST rate cuts, plus if there are no positive news on the tariff front, then I think December is a live policy and we could see the RBI cut the policy rate by 25 basis points. in the December policy. I think February right now is a little, still a lot of unknowns for us to make an educated, forecast on what happens in the February policy. As things stand today, my sense is that the RBI has space to bring down the repo rate down to 5% if required and if growth, severely disappoints over the coming months.
Okay, all right, Sakshi, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us your perspective in terms of the CPI data, which has come in for the month of September at 0.13%. We have the core CPI, which has also come in at around 1.3%. So that's the data which is coming in 1.3% versus 1.7%. So there's a softening which has really taken place in terms of core CPI. We'll take a short break. On the other side, we'll focus on the healthcare sector and connect with Kevan Movdawala of EY, Parthenon India, and Varun Khanna, who is the Group MD, Quality Care India. Stay tuned for that conversation. Welcome back. Well, you're still tuned into Halftime Report this afternoon, and it is turning out to be a session where there is definitely pressure for the frontline indices as compared to the advance, as compared to at least the mid-caps at this point in time. So the mid-caps are under pressure as well. So down around 0.8% currently for the mid-cap index. The advance decline ratio has been extremely negative from the get-go. So we have around 680 stocks advancing to around 2,170 stocks declining at this point in time. And as you can see, there's a huge gap between the red and the green line, indicating that the breadth of the market is definitely on the negative side. Some news coming in from KEC International. The bagged orders worth around 1,064 crores in the international TND business in Saudi Arabia. So positive news coming in for KEC International. That stock is holding up with a gain of around 0.3%. But let's shift focus to the entire healthcare space, the hospital space. A recent EY report says India's healthcare sector has made major progress when it comes to access, capacity and affordability over the past 2 decades. But what is the way forward, and how exactly do the PE funds stack up in the entire hospital space? We have with us Kevan Movdawala, who's the National Healthcare Leader, EY Parthenon India, and Varun Khanna, who's the Group MD, Quality Care India, Care, Kims and Evercare. Basically, he's the MD of that particular consortium. Gentlemen, thank you very much for joining in. Kevan, well, I'm going to start with you. Your report is very comprehensive in terms of outlining the growth of the Indian hospital space. But if you look at it in the past 5 years odd, it wouldn't have probably been as rapid and as fast if it wasn't for the private equity money that came in. Do you think that was the key catalyst?
Oh, absolutely. I think we are a large population with a high disease burden, right? And scale is a key imperative for the healthcare system. And pricing services for enabling mass consumption, like we've seen in other sectors like telecom, retail, is really going to be important. This needs deep pockets, Ekta, or long-term players with a future commitment in healthcare. That will take time. And we all know that healthcare is a high capex investment area with a high gestation period. the private sector, enabled and fueled by private equity, has made these rapid strides, right? So on one side of the equation, driving ARPOBs of 35 to 40,000, which is really value healthcare at the core. And also on the other side, innovating the business model. The median return on capital employed of the top few players was 5% 5 years back. It is 13% now. These are dignified returns, Ekta, despite serving the affordable agenda for the country. And cost innovation is in our DNA. And what private equity brings in access to capital to set up beds in underserved areas in tier 2 markets. And that's the juggernaut which has really been fueled by this capital.
All right. Varun, I just wanted to get your thoughts on this particular private equity piece in the hospital space, because if you look at it, a large amount of the conglomerates or hospital companies in India now either have some private equity investment, or many of them are even controlled by private equities, and the control seems to be switching from one PE fund to another PE fund. So just before we get talking about the report a little more, just wanted your thoughts in terms of what the way forward would be when it comes to the holding structures of a lot of these hospitals in India. Will it be PE run? Do you think that that's only going to incrementally rise from here on?
So first of all, thank you, Ekta, for having me on the show. I think the way I see healthcare is not PE run, it's management run, but PE invested. I think that's the way first I see it. See, I think carrying on what Kevan said, Ekta, a lot's happened in India. I think we should understand what's really fueled this access. So, and access has been enabled in this country, and I still don't call it completely because it's not equitable enough. But the way I see it is that we've doubled our bed capacity over the last decade and a half. And we're still not there. We're still about a bed to 1,000 people, whereas the need is significantly higher. We are almost half of what our bed capacity should be compared to the global averages. And when I say the global averages, I'm not taking the Western world or the highest averages. So to develop that kind of access, we need a lot of capital to come in. I think private equity has been able to bring that capital, and we need to enable sustainability as well, because no one's going to bring in capital if sustainability doesn't come in. But the good side is that now India, with that money, is being able to develop access in tier 2, tier 3 cities. As I said, when essentially we saw private healthcare coming in over the last 2 odd decades, it actually went to tier 1 first. Let me ask you this question. If you look at healthcare 3 decades back, and I was on the other side, on the receiving side of healthcare, when I went for my dad's transplant, India would do transplant in 3 to 4 cities. Today, the same procedure and more complex stuff is also available in significantly more cities in this country, and I think India needs that. I'd see, and again, when you look at the frugality that India has been able to show to the world, I mean, we still deliver very high quality healthcare at $300 to $400 per day. Those are the kind of ARPOBs that we run in India. It cannot be compared. I mean, there's no other place in the world, and I'm talking about, again, the developing world. I was in Indonesia, a year ago. I used to run hospitals there, and same GDP per capita. When I see the cost of healthcare in Indonesia, it's actually 3 to 5 times of what we have in India. So I think in India, we've been able to show the word frugality. It's now time to show a mix of frugality and quality. And I think that is being enabled by a lot of people who are looking at efficiency and quality work.
Absolutely, Varun. Important points made there. I'm just going to pick up a point from here, what you were making, is that there is still some more growth that is still left, a lot of room for growth versus other peers globally. Kevan, coming to you, then does that mean we'll see more funding that will come in? And tier 2, tier 3 city side of hospitals or healthcare, will that see the key focus now in terms of investments?
No, very much. Even today, while Varun spoke about the fact that we have 1 bed per 1,000 on an average, what we really measure is quality bed density per 1,000. The metros today are probably 0.5, 0.6 per 1,000. The tier 1 cities are sub 0.2 per 1,000. So there is this huge demand-supply gap which is there. And, we've covered this in the report. I think the India of the next 25 years is going to be very different from the India today. 49% of our population is going to be above 40, right? Versus 23% at the beginning of the decade. That's 82 crore Indians. And of that, more than 30 crore are going to be above 60 years. right? We're seeing the whole onset, and I would say we need a crusade in a way against the non-communicable diseases, right? Today, 65% of our disease burden is in the non-communicable disease space. And what we are also seeing, unfortunately comorbidities, right? 5% of our population today has more than two conditions, right? And that's going to go up to 25%. So that's a huge change that we are seeing. The advantage that we had is very soon going to become, a crisis situation over the next few years. So until we focus on longitudinal care, prevention, preserve our cost advantage, our healthcare spend as a percentage of GDP is going to double, 7% of GDP, which a country like ours can't really sustain. If we focus on these themes, right, we can still limit it to 5%, closer to something where China is at, and we'll probably need another million beds. We'll be below 2 beds per thousand, and that's the right mantra for a country like ours to really drive mass healthcare at the last mile.
Right. Well, Varun, before we let you go, this report also highlights the challenges that Indian hospitals face. And if you talk about challenges in the recent times, there has been some amount of friction with insurance companies and hospitals, possibly because of the lack of revision of rates and receivables piling up. Where does that situation stand with hospitals and insurers at this point in time? And just an additional part of it is that the CGHS rates were revised very recently. How beneficial is that?
I think, again, the macro picture is slightly different from what you currently read. I think I won't go much into the last quarter. But macro, if you look at it, the out-of-pocket, which used to be 80-odd%, out-of-pocket expense in healthcare used to be 80-odd% a decade and a half ago. And that's now gone down to 39, 38%, which is incredible. For a country like India, can you imagine 62% of the people are getting healthcare, which is not funded by them? And I think kudos to three things that have enabled that. One is the insurance schemes that the government has run. Universal healthcare programs today are making it affordable for the common man or accessible to the common man to get into a hospital. Second, I think the insurance penetration, which is the private insurance penetration, is getting better. I think it's moved into low double digit now from single digit, which is pretty good. So about 200 odd million people have private insurance outside of what their companies would insure them for. And then, of course, there are these state schemes which are again enabling that access. Sustainability is key to growth. We've all been talking about developing the million-odd beds that the country needs in the next 7 to 10 years. That has to be enabled, and that can be enabled only by three things. One, the talent being there. So our industry is nothing but talent, technology, and infrastructure. And when I look at talent, I think we should thank the education system that we are today enabled by that talent. We'll be producing 1 million-odd doctors over the next 7 to 10 years, which would mean that we can enable 1 million beds because each bed needs a single doctor to come in. Outside of that, the other two that I spoke about, which is technology and infrastructure. See, the cost of technology and infrastructure in India is the same as now anywhere else in the world. We still import the technology. And infrastructure in India is no longer cheap. Today, buying land and building. So I think all of that is a business cycle. And yes, we've had challenges in the past where rates have not evolved. They haven't gone up. Even medical inflation has not got covered. So I think that's something which is now happening. There is rationalization that's happening. On CGHS, it's a very important step. I think we've been talking to the government about it, and we are very happy that government has really enabled that.
Absolutely important points made there, Varun, as well. Sorry, in short of time right now, but thank you so much, Varun, as well as Kevin, for joining in with us. An interesting chat there, a longer chat later on at some point of time. Thank you so much for joining us. On that note, we're going to sip into a very short break. And here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store, Google Play Store, or you can scan the QR code on your screens. Welcome back to Halftime Report on CNBC-TV18. As of now, the markets have shifted to the day's lowest point, 25,090. So yes, that's where the market and Nifty is trading at, down almost 0.5% in today's trading session. We're seeing a fall coming in for a Natco Pharma, especially in the last 30 minutes. Electra Green Tech, that's another one that's come down. Also, and furthermore, decline is what Electra Green Tech is seeing as well. So keep an eye on that one. And obviously, in terms of top losers today, we do have Just Dial after its numbers. That's sulking in trade. Agility, Dixon Tech, all these stocks are under pressure. But yes, markets at the day's lowest point as of now. On that note, we're going to slip into a very short break. On the other side, we'll be joined by Manisha Gupta, who will be speaking with Krishna B. Goya of a Gem and Jewelry Export Promotion Council. Stay tuned in for that conversation.
Welcome back, and joining us on the show now is Krishna B. Goyal from Gem and Jewelry Export Promotion Council, and also Dwarka, a company that they own. Mr. Goyal, hi, thank you so much for joining in. And first of all, what is your sense on the silver prices itself? All-time highs, a bit of a correction is what we are working with in the European markets right now. But how do you look at the price moves from here?
You see, basically, if you look at the silver, Manisha, the overall production, and there is gap in production and demand. We have lower production and higher demand. The industrial consumption has grown a lot. So I see that it will strategically always keep on moving upwards. There are certain course corrections which you may see, because right now what the jumps that we are looking at, they are unprecedented, because every day there is so much of fluctuation in the prices that has never been witnessed in past. But logically, silver is bound to grow.
All right. Mr. Goyal, when we look at the price trends, it's trading in a backwardation, meaning that the spot is more expensive than the futures market right now. Do you see this trend sorting itself in weeks or months to come?
You see, right now, future is, because as I've told you, if you look at just last 1 month, there has been a rise of about 25%. I mean, it was trading at 41.25 per ounce a month back, and we are seeing it as $51 per ounce today.
Right.
So this much of rise will see some course correction. So for a long-term investor or long-term buyer, silver will be a good asset base. So I see that prices are bound to go higher, even if they are showing the futures lower than the spot.
All right. Mr. Goyal, also the important thing is on how the demand really has been, because we understand that the physical silver in India is trading at a premium. What is that premium right now? Is it difficult to get physical silver on hand?
Yes, actually, there is difficulties in market. There are the supply is actually disturbed because of the sudden increments in the prices. I mean, yesterday the premium was at a particular point of about 40,000 rupees per kg, which has been never there, you know. Today, if anyone goes to buy even 10 kg of silver, they are finding a hard time to buy. There are certain regions for it, you know. Earlier, the imports were not in restricted category. So recently, government has put silver and gold both in restricted category for import. So one need the import license. So earlier, the exporters who were freely importing the gold and silver, they need to have the advanced license for their imports. So that has added along with the prices, that has added the disruption in market.
Clearly. Mr. Goyal, what is the demand that is seen right now? Is retail buying silver at this point in time? Are they buying bars, coins? And how are you then preparing for Dhanteras or Diwali buying that people do in sense of silver?
You see, basically, the demand is there, and when the prices are in such fast increasing trend, even the consumer wants to protect themselves for their Diwali gifting or for investment purpose. We as jewelers, we already foresee what kind of market or demand we expect during the festival season. And we prepare ourselves months back, All this crunch of supply is recent. I mean, this we are witnessing from last, say, 10 days. So all the jewelers, for that matter, they are covered. But yes, even for a jeweler, it is a challenging time, because say if we have sold something in the morning and in the evening when we want to replace it, we don't know at what price we are going to buy it and whether we'll have supply or not. So they are really very challenging times today.
Well, as you said, Mr. Goyal, this is something that you haven't seen in perhaps a lifetime career. That's what we are looking at in the Indian markets when it comes to silver.
Well, yes, definitely, Manisha. Unprecedented times when we've seen this take place with gold and silver. Thanks very much for joining in and taking us through that conversation. Well, we need to take a short break on that note. But before we do that, just a quick word on the markets, because the Nifty has now breached 25,100. So 25,080 is currently where the Nifty is at. It's down around 0.6%. So definitely turning out to be a day which is much more volatile than anticipated. So the mid-cap index currently is down around 0.8%, and the advanced decline ratio, like we've been pointing out, has been on the weaker side. A lot of stocks in focus. So we are seeing financials which are under pressure at this point, with the Bank Nifty, which is down around 0.6%. Only around 8 stocks gaining within the Nifty at this point. Take a break. Be back with more. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. While markets are seeing a bit of a downtick, but Diwali is just around the corner. And here's a glimpse of India's top market masters, Vijay Kedia, Sridhar Sivaram, as well as N. Jaikumar, take part in Diwali musical महफिल with Mangalam. Take a look.
मेरे को ऐसे लगता है कि I'm bullish on tourism. I think now government is awakening that and bent upon giving all this promoting domestic tourism. So मेरे को लगता है टूरिज्म से रिलेटेड जो भी शेयर्स हैं, चाहे उसमें एयरलाइंस आ गया या टिकटिंग वाले आ गए या होटल्स वगैरह आ गए,
इवन एयरपोर्ट बिजनेस,
हाँ वो भी आ गया. और लेकिन सब एक्सपेंसिव है, कोई भी सस्ता नहीं है, लूट का माल नहीं है यहाँ पे. सब ये सब पसीने का पैसा है यहाँ पे. तो लेकिन जब भी मौका मिले तो मेरे को इसमें टूरिज्म में ठीक लगता है. और मेरे को हॉस्पिटल इंडस्ट्री मेरे को ठीक लगता है.
हॉस्पिटल एंड हॉस्पिटैलिटी.
हाँ, हॉस्पिटल एंड हॉस्पिटैलिटी.
And Sridhar, you've said gold hedge against currency, hedge against inflation, store of value.
I think I'll put it slightly differently, because I've followed the emerging markets for many years now, almost 25 years now. And I've seen the ups and downs of India right from 92 when I started. For about 8 to 9 years, India gave no returns. But over the years, if you see on a longer term period, India has been one of the best performing emerging markets. So I think a lot of people are worried that we haven't given returns this year. But I think it's a very short term view. If you look at 5 years, 10 years, 15 years, 20 years, India has done phenomenally well, and possibly in the top 2 in terms of dollar returns. So I would say that just bet on the country, bet on India.
Just bet on the country, just bet on India.
And in fact, if there's something that I could describe in the way things are changing, which is the only constant.
Yeah.
And of course, as I said, musically, since that's the theme for the evening, Har Ghadi.
All right, let's do this.
हर घड़ी बदल रही है रूप जिंदगी, छाँव है कभी कभी है धूप जिंदगी, हर पल यहाँ जी भर जियो, जो है समा कल हो न हो. So So the time invested in the markets is important.
Yes. Rather than timing the market.
Rather than timing the markets.
Yes.
Perfect. And
तो अच्छा समा कल क्यों न हो?
We are at 2,500 per capita. So whatever, 2,800. I mean, in the next 10 years, this can only go up. Our GDP will easily double, triple over the next, say, 10 years. So just that will take the markets up, just the fact that we have such a growing economy.
But we have to be clear that we need to separate the signal from the noise.
Of course.
yeah,
Any number of people will say a lot of things, and I know that that's important. My guests here have talked about to be careful about India, but one of the things I would like to say is this participation has resulted in a massive amount of hearsay and people saying, I heard this, ye ho jayega, wo ho jayega.
so I'll ask you to hold on to that thought. So he's speaking about India. You're speaking about a lot of noise. So noise to signal ratio has to be improved. And he often speaks about the long term. He's been speaking about the long term, saying, ye hai long term, ye hai long term, ye hai long term, meri jaan. So let's end with all of y'all giving your investment philosophies through a song. Let's start with you, sir.
कभी मैक्रो, कभी माइक्रो, कभी स्लो डाउन, कभी स्केल, कभी यूएस, कभी चाइना, कभी झगड़ा, कभी मेल, टेंशन के हैं कई नाम यहाँ, जरा हट के, जरा बच के, शॉर्ट टर्म में मेरी जान, है दिल है सिंपल कमाना यहाँ, यदि लॉन्ग टर्म, बस लॉन्ग टर्म, ओनली लॉन्ग टर्म मेरी जान.
And you were saying signal to noise ratio. What is that?
On a somber note, कुछ तो लोग कहेंगे, लोगों का काम है कहना, छोड़ो बेकार की बातों में कहीं बीत न जाए रहना, कुछ तो लोग कहेंगे, लोगों का काम है कहना.
All right, so the message is clear. Hold for the long term. Ye hai long term, ye hai long term, ye hai long term, meri jaan. And for you, it is avoid all the noise. Just focus on what you have to. Kuch to log kahenge, logon ka kaam hai kehna. But the third part, believe in the power of India.
Ye jo desh hai tera.
Ye jo desh hai tera. Oh wow. Let's end on that note.
Let's do. ये जो देश है तेरा, स्वदेश है तेरा, तुझे है पुकारा, ये जो बंधन है वो कभी टूट नहीं सकता.
Welcome back. Well, for the markets, the advance decline ratio, there's no sort of improvement which has taken place there. It's at 1:3 at this point in time on the National Stock Exchange and 1:2 on the Bombay Stock Exchange. In terms of key indices, Nifty has recovered back to 25,100. So that's a positive sign, but it's still down around 124 odd points. Let's see whether that sustains or not. And there's a tad bit of a recovery which has taken place for the mid caps. So maybe there is some amount of buying which is taking place at lower levels for the mid cap index at this point as well. Well, on that note, it's a wrap from the entire team. Thanks very much for watching. Business Lunch will come up next. Stay tuned.